bring on board Rohit Siksaria, the fund manager equity at Sundaram Mutual. And Rohit, good afternoon and thanks so much for joining us. First up, help us make sense of the kind of volatility that we're seeing in terms of Trump tariffs. You have crude prices, lots is happening globally. The impact is also being seen back home. Amid a market like this, share with us what your view is. Do you believe that the kind of correction that we've seen so far, we've bottomed out over there, and the recovery that we're seeing over the last couple of trading sessions is here to stay? Or do you believe this is just a dead cat bounce and we're once again heading back towards the correction that we have been reeling through over the last couple of months? What's your view there?
Good afternoon. See, when the correction started, we started from a overvaluation level. Markets were clearly expensive at that point in time. Now, after the correction, markets valuations have turned reasonable, and few factors, domestic factors which were going against the markets are turning. Growth had slowed down in India. Growth has slowed down mainly from two fronts, both domestic. One was the government spends were weaker, and other was the liquidity environment was tight. Now, what we have seen is from December, the government spends are coming back. Though government has cut the capex target for this year, but whatever the new targets are, they are spending that much. So government spend is coming back, and even on the RBI front, the liquidity environment is easing. RBI is pumping in sufficient amount of liquidity. So both these factors should help in the growth scenario going forward. On top of that, as you mentioned, the crude prices have corrected sharply. Even that should help in the domestic growth going forward. The key thing which is still unknown is how the Trump tariffs plays out. Because there's a lot of news which comes out almost every day in terms of Trump tariff. He's going to put this tariff, that tariff, then he defers, then he again announces. So that's one environment where things are not very clear on how it will play out. So on the global side, that's one area which is a matter of concern. Otherwise, domestically, I think we are in a much better place than where we were, let's say, 6 months back.
All right. Hi, Rohit. Good afternoon. This is Shrishti also joining in. But Rohit, you are known for finding the gems within the small and the mid end of the market. And given the recent volatility, Rohit, help us understand that as per you, what's in the store for the broader markets? Because a lot of this froth has been taken away. But do you believe that there could be some more pain in the near term for this end, or do you believe that the valuations have now resurrected to the fair values and maybe it's a time to go ahead and look out for some opportunities?
See, opportunities will always be there in the market, because the market is huge, and especially in the small cap space, there will always be some of the other opportunities. But when we talk of the broader market, in the broader market sense, there has been a significant correction in mid and small cap space, but still they are slightly more expensive compared to large caps. To that extent, small caps may face some further correction or as an overall basket, but right now there are a lot of pockets where you can see opportunities emerging. So I believe for an investor, it's a good time to enter the markets and build their portfolios over the next 3 months.
If now is a good time, and now is a good time to start building investor portfolios, what would you advise to someone who's new to the market right now? Where should they be parking their money? What's looking good in terms of sectors, and what would be some sectors that you would advise our viewers to avoid at the moment?
See, the sectors which I have liked almost for last year or so, and I continue to like, are your banking and financial services. And within that, mainly the lending financials. There, as I mentioned, RBI is easing liquidity, and that should help the entire lending financial space, especially the NBFC space. The valuations there remain reasonable. So valuations was never a concern for that part of the market. There was a concern coming in terms of the asset quality, but the feedback which we are getting is the asset quality is already improving. So it's not that it's a start of a painful asset quality cycle. There was a minor blip and things are already improving. So that's one space where we are very positive. Another area where we are positive is on the consumer discretionary side. Especially, we have seen this budget government also putting more money in the hands of the taxpayers. So we believe such an environment bodes well for the consumer discretionary space. Even if we talk of long term, in the long term, the huge aspiring population of India bodes well for the consumer discretionary space. So those are the spaces where we are positive. Where we would like to avoid is the global cyclicals, something like your metals and minings, global energy, those baskets is what we are avoiding.
All right, Rohit. But other than that, Rohit, help us understand your take within the auto ancillary space as well, because I believe that though autos are having a bit of a tough time and challenging time for themselves, it's the auto ancillary where you have some more hopes of growth. Give us your view within the auto ancillary space, as well as which are the pockets that are looking interesting to you?
Yeah, you're right. Auto ancillary space is looking interesting. Auto ancillaries are getting growth from increasing content both domestically and higher share globally. So from both fronts, their growth is better. So that's why auto ancillary is looking good. And also within the auto space, what's happening is now we are at a stage where we will again have a pay commission who will come up with a recommendation in a year's time. And there is more money in the hands of the central government employees. And that we have seen historically plays well for the four-wheeler space. So maybe in a year's time, the four-wheeler space will start looking good and that benefit will also flow through on the auto ancillary side.
Okay, Rohit, thanks so much for sharing your view on market outlook with us. On that note, we'll let you go. Thanks so much for speaking to us at ET Now once again.
If you like this video, then like, share and subscribe to ET Now.